All right. Here we go. Test. Can you hear me? Okay. Hi, Antoinette. Good evening. And anyone else who's out there listening, watching. I actually thought about stuff today, as in things that bear mentioning and discussing and maybe exploring, mentioning, learning, you know, all the fun stuff to do on a Saturday. So yeah, we have, granted, some of this comes from Reddit, but you know, it kind of, fat man. Now, why isn't Big Man putting out videos lately? What's going on there? I don't know. You're gonna have to go check him out. But we have a weekly options trap thread or post in Reddit that I thought was worth looking at, because it kind of displays a very narrow understanding of options, which of course we know that the apes have, but I just wanted to highlight it to say, okay, this is definitely one thing you could do. It's definitely one thing you could do, but there's a lot more that you could do. And it doesn't have to be so binary, not binary options. By the way, if anybody knows how to program a binary options exchange or write software, a website for doing basically prop bets, I want to be able to do proposition betting on you know, various things, anything, user submitted content, be like a, you know, a web 2.0 proposition bet website. And they're out there. There's commercial implementations, but I don't want to. I'm looking for an open source. I'm looking for an open source solution. So anyway, I digress. So we'll talk about options a little bit, and then of course the Rdbx thing. And you know, this is interesting. So I watched Chris Norland's video on this earlier, and he's kind of all over the place on it. And I have to, you know, I'm just keeping it real, as he says. I'm just keeping it real. I have to keep it real. He's got a couple things wrong in his video, so we might watch that. We'll check out this Teddy Zane video too. In fact, we might start with this, number 2. It's a hot item. See, Model 3 dude knows already. He's already. I haven't said anything about it. I haven't said anything yet on here. And you know, he's just like, don't get caught in that rug. Don't get caught in that rug. But you know, I mean, what else can we assume at this point? Now, I don't like to make assumptions. I like to go off of facts. So that's why, you know. So I try to take a look at some of these. Take a look at some of these claims. See where the evidence leads, what the evidence points to, and at the end of the day, you know, nobody knows what's going to happen with anything. And it's not really even about predicting what will happen. It's about judging the evidence, evaluating the evidence, and saying, all right, is this a reasonable conclusion based on what we know? Yes or no? And if yes, then okay, what does it lead us to? What would be a good game plan? And that still might not go the way you want it to, and that's fine, because you at least did true due diligence. So you could say that was a good trade, even if you lose money. That's the S&B Capital One Great Trade, Mike Bellafiore approach. And I like that, because, you know, you have to get in this habit of, you know, objective research, whatever, right? We know about that. Okay, what's going on with the GameStop share dividend / split? I've seen some wild speculation on Superstonk about that. Everything from what? I guess it would yeah, August 6th. There's some ape in Superstonk that is swearing up and down that it's going to be on August 6th, 8/6. But, you know, I've been asking this in every stream. What's going on with this? What's going on with this? It's supposed to have happened now. I think Al from Boston gave a timeline. Might have to go back and look at that. So we'll see. Now, speaking of Al from Boston, he got a video out that claims that he has empirical evidence. He has a spreadsheet that he made based on Bloomberg terminal data of all institutional holders of AMC, and he claims that it adds up to more than what it's supposed to. Now, he doesn't tell us what that number is. He doesn't scroll to the bottom so we can see the column summed at the bottom. At least I didn't see it. Now, I might have missed it in the beginning, but maybe we can look at that. It's only like 2 or 3 minutes. But he claims that the institutional, and you know, this kind of stuff, it should be pretty objectively verifiable. It's not really a falsifiable thing, right? That stuff comes from the SEC. So you're telling me that if we look through all of the filings and add them all up, they're going to add up to a bigger number than what Fidelity or any other broker is telling us, and it's more than the float, and it literally proves that there are counterfeit shares. That's what he's saying. So he's really inciting something that's, you know, it's dangerous. I think it has the potential to be dangerous because beyond being ignorant and infusing this thing with like, okay, well, yeah, I know that you have your I know that you know, Fidelity does all this. They add up all the holdings, the filings, and they display that. Well, I did it independently, and I got a different number. So they're wrong. Okay. I don't know how that's supposed to be believable, how that has any credence, but we'll take a look at it because, like, that's a problem to me. When you have a parallel narrative, it's alternative facts, really, is what this is. It's alternative facts, 100%. It's the Kellyanne Conway special, alternative facts. The brokerages, yeah, the SEC, they have their facts. We have our own facts. I did the DD. You can trust me. It says there's more. Okay, more options on AMC. So next week's options, $18 max pain when the stock is, you know, a few dollars below that. $18 max pain this coming week, which is a monthly expiration, 17th, versus the expected move that's implied in the option chain implied volatility data. So, in other words, what is the option chain saying is likely to come in terms of volatility, implied volatility, versus what do the dollar amount bets on that option chain, what did they indicate in this max pain theory, which, you know, it doesn't always work out. But the, you know, obviously the premise is that the market makers, Wall Street wants to take as much customer money as possible, so, you know, they're going to make as many options expire worthless out of the money as possible. And what is the stock price where that happens? That's max pain. So how does that jive with what the actual option chain itself, not based on how much volume, but based on the internals, the internal pricing structure with implied volatility? What's the difference there, and which one is more accurate, maybe, or which, you know, are they the same? Are they different? Which one's better? Or can we even say that? I don't know. We'll see. And finally, this is interesting too, and I don't know what to make of this, but I have a couple theories. But Webull versus Fidelity inflow and outflow data. So if you're looking at something, maybe we could start with that. If you're looking at something like, and I have so many tabs open, it's like it's gonna be a mess here. I mean, you can't see it, it's hidden, but Um, so let's go straight to Rdbx, I guess. Or, well, we're going to go to Rdbx, but we're going to look at this this page. Okay, let me get this off here. So, all right, looking at Rdbx, shifting over to Rdbx. Yes, shifting to Rdbx. Let me make sure I'm not missing anything here. Max pain means nothing when it comes to AMC. I tend to agree, and I think I would say that, you know, with respect to more than just AMC. I mean, I don't know. I'm sure that there's some kind of research on the theory itself, but it's one of these things, to me, it's one of these things like market maker, gamma hedging, delta hedging. Once something gets wrapped up in an assumption, I mean, is it really credible anymore? So yeah, oh yeah, they're trying to take it to max pain. Are they? Who? They are trying to take it to max pain. You know, I'm not saying it's not impossible, and things kind of gravitate toward strike prices, and pinning is a thing, but it's not. Pinning is a thing, but there actually are mechanical reasons why that happens, where there, you know, underlying stock prices tend to get pulled to certain strike prices based on open interest and volume. It's not really as nefarious, I think, as the apes think it is, but I don't want to get into that right now. But yeah, I think I'd like to know more about the history of max pain theory. But in terms of this inflow outflow thing, you know, and you could draw some conclusions from this maybe, but basically, I'm comparing the data that's given on Fidelity in terms of buy sell orders. Okay, and it's not apples to apples because we don't have exactly the same data. In other words, on Webull, it's given in dollar amounts. Okay, so it's not quite a one-to-one, but you can still get a sense of, was there more buying, was there more selling? So looking at Rdbx, which is right here. Should be able to highlight this. Yeah. So, I guess not. Okay. Yeah, okay. So it shows 3,070 sell orders. This is for Friday, obviously. Okay. Come on now. Well, anyway. Guess that won't be highlighted. 3,070 sell orders versus 2,069 buy orders. So, you know, clearly more. You get like 2-to-1 buying. Sell over buys. On an increasing price. $3.75, or nearly 40%. So, in other words, basically, just to simplify it, the stock went up, more people sold than bought, according to Fidelity, on Fidelity's platform, right? So, if we pop over to Webull, let me make sure I switch over, and I think I have it cropped down pretty tight. There we go. So, let me make sure I'm on Rdbx. Okay. All right, great. We can see that. So this is showing inflow, and this is in millions of dollars. So again, it's not apples to apples, but it's an indicator. But this seems to be indicating that we had 233 million inflow versus 219 million outflow. So in other words, more money flowing into the stock than out of the stock, or more buying than selling. And this breaks it down by order size, but it's essentially the same. It's essentially the same. There's not anything different there in terms of the breakdown. So I guess my question is, well, and we'll get there. We'll get to that 200% short interest. Don't worry. We will get there. But in terms of this, uh, it's hard to find information about what Webull is actually showing you here. Where are they getting this information? Is this just on their platform, or is it like the default NASDAQ data? It's not full. It's not the full market. So these are just kind of rhetorical questions, but this is what's being displayed. So my kind of contention is that this has an influence on what people do, just like this has an influence on what people do in terms of buying and selling. But it's interesting to look at these. Okay, so let's look at another one here while we're on this. What was the one I looked at? I mean, we could just look at AMC. Is it on here? Yeah, right here. So AMC has, this is Friday again, and the price went down. There was more buying than selling. That's what we're indicating here, and that's really a lot more buying than selling. Okay. So price went down, not that much, 30 cents. But there was way more buying than selling. Okay, got it. So let's go back over to this Webull thing and change it to AMC. So this is interesting. Okay, so here we go. Is this, are we on AMC? No, we're not on AMC. And now we're on AMC. And what do we see here? So again, switching back to here, way more buying than selling. Way more. Like mostly buying, according to this. And a little bit of selling. A whole lot of buying. Going back to Webull, we see actually more selling than buying. So outflow of 52.9, and this is in dollars, so notice it just says dollars, so it's actually delineated out with commas. 52.9, essentially $53 million, versus an inflow of $51.6 million. So, okay, so can, the opinion that was starting to take shape in my head was, okay, if this is Webull, if this is information on Webull's customers, then maybe what it is, we know that Fidelity reports what their customers are doing. So if Webull does the same thing, then maybe we could conclude that Webull traders, on the whole, I'm not saying all, maybe we could conclude that Fidelity traders are more sophisticated. They're more informed. Right? They're less uninformed, and the Webull traders are more uninformed, right? Because we see kind of the opposite happening, and when we looked at Red Bull, we looked at Red Bull, fucking Redbox. You see kind of what you would expect to see in terms of people trying to affect a short squeeze. You see more buying over here on this platform. When we go to the other platform, this data, you see, markedly more selling. So that one particularly, that one's so wildly different. It's hard to really understand what's going on there with that. Is there really that much difference between people who use one versus the other? Is it a function of what data is being reported? Like, is the Webull data not even really reflecting Webull? Is it reflecting some segment of the market, like the NASDAQ data that you get, not full level 2 or total view, but, some budget implementation of NASDAQ data, or, what is going on there? It's odd. It's odd to me, but, so I guess it's kind of hard to generalize about this, because if you looked at the Fidelity data, you'd say, okay, well, yeah, clearly, and the price action substantiates that. It was up 40% today. Of course, some people are going to take profits. I mean, and then when you look at AMC, you see that it's mostly buying, and that would be consistent with the ape narrative of we're just buying and holding. I don't know how to sell. I literally don't know how to sell. I just buy. Okay, but then when you look at, well, that's what you got here. But then over on Webull, we saw not such a dramatic. It was close to 50-50, but it was more selling. So that's less of an ape narrative. So it's just kind of weird, right? I just noticed that today. That's all I have on that. So the snake oil bottle was hidden behind a red box. Yeah, I don't know what the deal is with that. It's odd. I tried to go with a low, super, cheesy way to do it. Whatever. I don't have time to sit there. I don't have the kind of time or the money that Matt Kohrs pays to whoever creates his thumbnails. Maybe someday, but not today. Right. So I don't know what to make of this data. It's weird, but it's probably just the difference between the style of traders, I guess. But what are the apes doing? I don't know. I don't know. It scares me. Not really, but it's just odd. Okay. So so let's see. Okay, now we have a we can go back to AMC. So where's my Reddit? Where's my Reddit? Okay, here it is. Max pain for 617 is $18. Yay, $18. 50% run coming this weekend. Seeing that right there, when they said that, that's what made me think. No, I have to look at the option. I have to look at the implied volatility. And I have to look at the expected move based on that, which is easy to see in Thinkorswim. Because I would be very surprised if it indicated 50% swing, which would be I don't even where's $6-7 or whatever it is. Seemed a bit excessive. Okay, so created at 5 p.m. today. Stock price 1234. Wow, look at that. Okay, right there, 1234. Max pain 18. Highest call open interest strike 85. And look at that. I mean, I do like these open interest graphs and volume graphs that they have on the Maximum Pain website. It's nice to look at the option chain this way sometimes. But I mean, 45, approaching 45,000 calls open at 85. How do they think that's going to end? I don't know. How has it ended every other week? That's extreme. Not extreme bullish. absurdly bullish, but it's not really, because it's so far out of the money. It's basically, there's no point in buying those when the price is down here. Highest put open interest strike 13. Okay. Right here. With 22 and a half, 22,000. Call open interest amount, put open interest amount. Of course, there's more calls open interest than puts. Okay, so if people were to subscribe or believe in the max pain theory, it says max pain is 18. Now, I don't like that they didn't show us the other charts on there, the one with the red bars going one way and green bars going the other way, but that's okay. We know that it's 18. Where'd it go? We know it's 18. Okay. So then, let's look at the option chain and see what it says over here. So, we don't want Rdbx yet. We don't want Rdbx yet. I almost said Roblox earlier to myself. So here's AMC, and just looking at the option chain here, if you're not familiar with the way this is laid out, of course you have the expiration dates here, the number of days remaining to expiration in the parentheses, and then 100 is telling you that they're contracts for 100 shares. I mean, everything's standardized to that in our market, but it says it because you trade in some overseas markets, whatever. And then on the right side, this is the part we're interested in. So first of all, you have your implied volatility, the percentage there. And then secondly, in parentheses here, you have a plus or minus number, plus or minus 1.914. So what that's telling you is that the implied volatility currently 151.32 in that expiration date. And based on that implied volatility percentage, hello Manny, you could expect to see AMC stock move in either direction, up or down. It's not telling you a direction, just telling you an amount by what, $1.91 by Friday. So this is for the expiration on June 17th. That's just under a week from now. Just over a week from now. Just under a week from now. Just under a week from now. And the option chain is implying or suggesting, supplying an expected move of less than $2 from where it currently sits. So that could be $2 up, $2 down. What a lot of people do on their charts then, they would bring up the stock, and wherever this is currently, you know, basically add a couple lines to mark off these areas. So in other words, see where we at here. So we'll just do like 14. I'm just gonna, like, you know, do a line in here, one on the bottom. So we do 10, whatever. And it should be equidistant, but you know, for purposes of demonstration. So now, and this is for Friday, and this will update and change throughout the week, but now at least I have a starting point here to say, okay, here's where we closed. The option chain is telling us this. Now it could go all the way to this edge of the expected move at the top. It could go to the bottom edge of the expected move. It could go past it on either side, or it could go sideways. So it's not really telling you what it's going to do, but it's showing you what it's showing you kind of what the option chain is expecting it to do based on the implied volatility, which is implied. So it's not, it's literally calculated. It is a byproduct of pricing, the pricing model that they use. So basically a calculus equation with 6 or 7 variables. And one of them is implied volatility, but it's not one that's supplied. It's one that's calculated and extracted from the formula. So it's really interesting. Implied volatility changes with price, essentially, and volume, supply and demand, as well as just kind of the variance and movement of the stock. So sideways trading or small moves, less implied volatility, generally speaking. But again, it's not a direction. It's not directional. So that's why we have to put a line on either side and say, okay, here's kind of our range. Here's kind of our range. And Thinkorswim has another indicator called probability of expiring cone. And, so what it's doing something kind of similar. You can see it's kind of at the same. So Friday is here. So it's actually a little bit farther out, but it's guess it's set to 68%. So it's a standard deviation. So it's a little bit different of a technique to get to essentially the same thing. And there are a couple other ways you can do this, but that will give you, basically you have a 68% chance of the price remaining within these lines, the purple lines, the magenta lines. And of course this is expanding as it goes out, because with more time you have less certainty or more uncertainty in being able to predict the price. Longer time for things to go up or down, but in the short term, we see it's essentially very close to what the option chain is showing. And this is just, I believe, well, actually, it's been a while since I've looked at that, but uses statistical data to forecast future prices with specified probability, plots a standard deviation bell curve, designating ranges within which prices are forecasted to stay for each following expiration Friday. Okay, so it's very similar in a lot of ways, and it comes to this, a lot of times it comes to the same conclusion. But anyway, you can go in and mess with the settings, or you can do something, you can get crazy and put another one in and change the option, the parameters on it, and say, well, I want a probability range of, I want to change that, essentially. So I want it to be 85. Okay, so what would that do? So now we have two sets, and I changed the color of one of them. So the magenta, 68% chance of being within those on our expiration, which is right here. And it's essentially the same, oops. Again, it's essentially the same thing as our expected move. And the expected move wasn't exact either. I just eyeballed it. But so we got 68% chance of being within the magenta lines and an 85% chance of being within the teal lines. So, and that makes sense, right? Because if you're within this, if you're within the magenta, you're going to be within the teal. So that really doesn't help that much. But you could go the other way with it and say, all right, well, what about if I say I'll accept, like, 62. I want to see what I have a 62% chance of being within. Maybe I should make it not so close. But the lower down you go, the less useful it is. But just to say, see here. So magentas are 68, teals are 51. So we have 51% chance of being in here. This is a much narrower range. And if you really take it to an extreme, you see what it does. 25% probability, not that great of a probability chance. But you can see that it is trending. It shows it trending down, which is interesting. It even shows that with the magenta lines as well. If you kind of look, you do see that kind of drifting down. You see the center of it kind of drifting down. So it's interesting. But anyway, getting back to the point of that comparison was we saw essentially a $2 expected move based on options. But they're saying that the max pain is 18. So, I question how useful this is. And it's not just on this stock, it's on a lot of them. Am I talking about RSI? No. No. But RSI does use 70 and 30 as the oversold and overbought regions. But the probability of expiring cone that those lines that went out from the current price, it's a future, it's a kind of a, it's a statistical prediction of future price within a certain percentage of accuracy. So it's default to 68%, which is one standard deviation in statistics. So like a bell curve essentially. So we can say, and I took it off here, but now I don't have RSI on here. I want to look at RSI sometime though, not now, but and kind of break it down. But yeah, so I can see why it's a little confusing. Let me take those off. So this is just the candles, and it's telling us that you got a 68% chance that the price is going to be within these lines, within this cone. That's essentially what it is. So it's based on, it says statistical data, and it does reference the option chain. So it's very similar to what we were looking at over here with the expected move off of volatility. But the overall point is just that Max Payne was calling for $18, which is certainly more bullish, right? But that's not necessarily good. Yes, a sideways bell curve, exactly. That's exactly, yep, exactly. So this Max Payne thing, and it's interesting because it could be that it is more of a psychological thing, like kind of like certain technical analysis aspects, like, okay, we're putting out, it's known that Max Payne is this whatever number, 18. So, if that's out there, it's out there in the world, people know that. Does that influence anything like that, like subconsciously or subliminally? I don't know. Kind of the way that technical analysis levels and things like that might. I don't know. But the apes do tend to hype it when the stock price hits Max Payne or doesn't hit Max Payne, or whichever way they want it, whichever way they think is better. So the Max Payne price would be the price of most pain to market participants, like option holders. So you might want it to go past Max Payne, but I mean the thing is, either way you go past Max Payne, whether it's higher or lower, it's just going to change the balance between in the money calls and out of the money calls, and in the money puts and out of the money puts. So it's still a hell of a lot of money either way, but it's just that's the balancing point. But and they're saying it's 18 here. Now, this is they're saying it's 18. So, and this is a very good example of why you can't just look at it's not based on the open interest or the volume of these calls and puts. It's based on the dollar amount, and that's a detail that kind of gets overlooked a lot of the time. So if you look in here at 18, 18's right here. Doesn't appear that there's a lot there. But you actually have to calculate it based off of the option chain data in terms of prices. So it's kind of an involved process to do. Okay, so moral of this story is I prefer to look at the options option chain implied move, and by the way, or expected move. This is on all stocks that are optionable, and it's for all expirations. So you can see that in July, on the July monthly, on July 15th, we have an expected move of 469 at this point based on volatility. Or, for example, January 2023, we have an expected move of plus or minus 1848. And that could change, and it will change every day. You can update your lines, but I found it to be useful. You can put in something like the SPY, and you can get this too. And might be interesting to see what it says. Waiting for data. So it's showing was a 644 plus or minus move, so $6.50 for Monday, $11 for Wednesday, and $13.61 by Friday. And these will change again, so they'll continuously change based on the volatility. But so it can be useful to help, again, not predict direction, but just the amount, like how much is the option chain expecting it to move. We don't know which direction, but how much, how strong of a move, how volatile, in other words. It is implied volatility after all. So I like that. Okay, moving on here. And Manny's saying something. Okay. I need the price to go up. I don't understand how the chicken soup for the soul deal will affect Rdbx shareholders. So this is one aspect of it that I really didn't even get into. I didn't have time to get into it. But there's also another aspect of this with part of the float being locked down, inaccessible, supposedly. And that's why you have essentially a 2 million share free float, which is kind of odd. Now, I read this on the Rdbx subreddit, or was it the Short Squeeze subreddit? It was one of those two. And they were talking about it, and they said that again, it's from Reddit, so take it with a grain of salt. But basically, that those shares, it's because of the paper, I guess, because of the merger and acquisition paperwork or whatever, the deal itself takes the SEC, I think, 60 days to process that or something. So I guess that, and then we're talking about, I think, about 10 million shares based on all the other numbers. So it's a lot of deducing. There's not a lot of clear answers that I was able to find because, and this is where I get into all these fucking tabs that I have open here, but it's wild because, let's do it this way. So we got FinViz, and FinViz says shares outstanding, the SEC filing says, is 12.62 million. And we have, and then it says shares float 10.59. Okay, so there's about 2 million shares right there. But it also says in the filing there's no restricted shares. So I'm not sure exactly what those 2 million, because there's more than 2 million held by insiders. So I added that up. I added the insiders, and it was like 6.5 million. So I'm not sure. But we see a short float percentage of 38.56. And that's because it has a much higher float listed. So I guess it would be about 8 million, which would be tied up in that M&A deal, supposedly. So that's what this says. And this is probably fairly accurate. Now, why is Ortex reporting the float as 1.95? Well, we'll get there. I don't know. So here's Y charts. And they show they show it. No, not on here. It must have been, let's go back one. $12.62. And they're calling this outstanding. Now, their definition of shares outstanding is the volume of stock shares issued by the company and in the hands of the public. This number entails how much is being traded in the open market. Decreasing shares outstanding over time may be a result of company buybacks.
So decreasing shares outstanding, that going down, it's because the company's buying them back and pulling them off the market. Companies frequently make stock buybacks to retire those buybacks as treasury stock. Like, in other words, non-traded stock. Shares outstanding benchmarks. So it's showing Chicken Soup for the Soul Entertainment at 14.78, like just independently here. Paramount Global's got 650 million, and yada, yada, yada. Okay, that's all good. So it's 12.62. We've got the NASDAQ, because it's a NASDAQ listed stock. Oh, this is filings. So I think, yeah, right here. Go through all this because there's 143 hits for outstanding, but I was just trying to find weighted average of Class A common stock outstanding, 12.6 million. So there's that 12.6 million again. Yeah, Class A common stock, 500 million shares authorized. That was an interesting find. And I saw that earlier. So yeah, they only have 12.6 million shares issued. And again, I didn't go through this and search for the M&A and merger and acquisition and what's tied up and how it actually works out to be 2 million. I did not do that. I'm not going to do that right now. But where did I? Yeah, Class A common stock, and the difference there is just shareholder rights, voting rights, etc. 500 million shares authorized. They're using just over 12.5 million of those. So dilution city probably coming up. And then Class B, there's 100 million. So yeah, it's only 2 million right now, technically. But it's curious that FinViz didn't adjust it. Y-Charts didn't adjust it. I don't know. So then I got into the SEC, which is the same filings essentially, and here it is on an SEC filing, the 12.6 million as of March 31st. Okay, and 32 million shares of Class B common stock. Okay, so if we take those two numbers, this is so confusing and it's so, it's just wacky. So 12,618, 516, and 32,770,000. That gives us 45,388,516. Okay, so what? Okay, well, if we come over Fidelity and go to Rdbx, almost said Roblox again. Here's shares outstanding on Fidelity, and it says 45,389,000. And the number I just calculated by adding the Class A and Class B was 45,388,516. So 45,388,516. This is 45,389. So it's rounded up. So this is the first time we're seeing this number. So now we have a 45 million. Okay, that's total A and B, Class A, Class B. Okay. So now we have, where do we have? We have something else here. I got another source, Wall Street Journal. So this says public float 8.83 million. Now where did they get that? 8.83 million. I can't figure that one out. I can get to some of the other numbers. I can get to 12.62. I can get to, these different numbers. But how public float 8.83 million? Okay. Shares sold short 4.08 million, but it shows it as 46.23% of the float. Now, note it's still the same number of shares sold short. The only difference is the percentage, because now the float's bigger. right? So it's a smaller portion of it. And that's going to be key to where I'm going with this ultimately. Let's see, I got Yahoo Finance here, and this one's goofy too. They're all different. Balance sheet. Not balance sheet. Where is it? Share statistics. Shares outstanding, 12.6. Okay, that's, we know that. Implied shares outstanding, and they're calling that common equity, assuming the conversion of all convertible subsidiary equity into common. So, I guess, basically including the B, Class B, because that's what the number is, but 45 million 400,000. So 45.4 million shares, and with the number I got on the calculator was 45 million 388,000. So again, just rounding it up. Float 1.95. Okay, so it says float is end note or footnote 8. A company's float is a measure of the number of shares available for trading by the public. It's calculated by taking the number of issued and outstanding shares minus any restricted stock, which may not be publicly traded. So it's this 12.6 million minus restricted stock. So, but I haven't seen that figure anywhere. So, but that would be if we just did the math on that, 45. We'll just use the numbers that's here, minus 1950. So that's, or no, I need to do the 12.6, not the, yeah. Minus, I mean, it's 10.5 million shares. So that must be, the share, I guess, the shares that are tied up in a merger deal. I also don't know how it will affect shareholders. I know that there is a redemption, rate or something, but we may have to get into that a little bit deeper. But but we're not done yet with the fucking share information, because here's stockanalysis.com, and it says shares outstanding 45.4. Shares change year over year is down. I think that's because of those shares being removed from the float temporarily. Owned by insiders, 16.11%. So there's another indicator now. So is that 16% of what? Come back to that. Owned by institutions percent, 345.72%. And float, 1.95. So this insiders, now Fidelity has on their, if you go to ownership and insiders and go to insider transactions, it'll show you all the insider transactions here. Well, I got to log in, but it shows you those. So I added them up on a calculator, and I came to 6.395 million is what I came up with on that. Then if you go over to, where were we? We're on Yahoo, I think. No, we were on stockanalysis.com. Owned by insiders, 16.11%. So if I do the 45,400,000 number, multiply it by 16.11%, that's 7.3 million. So it's pretty close. There might, who knows, but that kind of makes sense. Okay, so that 16% is of the 45.40 million total shares outstanding, out of a possible 600 million total possible shares, authorized. That was the word I was looking for. So there's again, dilution city on this one eventually, if it makes it far. But, okay, owned by institutions, 345.72. So how do we make sense of this one? What would that number actually be? 45 point, let's just do it in millions. 45,400. And let's get that actual number. It would be 156,950. So 157 essentially million shares. 157 million. It says owned by institutions. Now, okay. Let's sign in this thing. Fidelity. Come on. Could be a fat finger. It could be, I don't know. It doesn't make sense. Not everything does, though. Oh, come on. Fidelity's not one to load. Okay. We go to ownership and insiders. That's right. Insider train ownership. So there's our 16.1% insider ownership. That's the same thing we saw on Yahoo. Other 0.1, that would generally be retail in these categories. In the scheme of these categories, it retails other. But I mean, very clearly, this is all within 100%. So that 345.72% owned by institutions. I mean, we're not showing here. I'm only showing 4 million, and that's the same. So it's always the same. It's 4 million on the short interest, but it's showing that the percentage, and I don't know why it's showing NA for short percentage of float, but short percentage of shares outstanding is right around 9%, so less than 10%. So you see what I'm saying? That this data is a little wonky. I don't necessarily like it. Okay, Bloomberg doesn't let me see it. Fuck you, Bloomberg. And then here's Y charts. Well, I thought I'd use that. Yeah, I already used that before. So a lot of different sources. Most of them agree on the basics, but I'm not. So this is the Rdbx subreddit, Rdbx subreddit. Rdbx being saved by retail apes, not financial advice. Rdbx, solidified merger is having troubles. Soup is not able to meet contract requirements, not financial advice. Do your own DD. Bullish. Okay. I don't know anything about this. It's true, whatever, but here we go. I just wanted to show something like this. Okay, of course. Short interest, 238%, 4.38 million. Okay, here we go. This is it. This is the meat and potato. Well, I mean, okay, it's not available, but I mean, at least we have that. We have 4.36, and we have 223% here. I don't know where are they getting 238%. It literally says 223.67. Okay, So they're, you know, so it's whatever. It's close enough. It's over 200 still. Okay, I got it. So now is where we start getting into some grifters. So let me close some of these, or at least collapse some of these tabs that I have open here, and get over to Mr. Teddy Zane. Okay, this is the first video I saw about this yesterday. Today, I guess. Yeah, today. And I don't know. I have many thoughts on this, but I just want to play it, give my voice a rest, and you know, let him give his exposition. Let him say it, what he's got to say, and then we'll come back and you know, evaluate some of the stuff that he says. Okay, so let me get that volume level situated, and here we go. He's loud.
All right, here we go. We got to talk about this shit. This is the most absurd, illegal Xeroxing of shares, synthetics I have ever seen. They're not even trying to hide it. This is blatant, in your face, destroy a company. And the SEC should be stepping in right now and saying, game over, shut it the fuck down, but they're not. We're talking about Rdbx, and I'm going to compare it to AMC because AMC has such a large float, you can hide a lot of the illegal activity housed within the AMC play. You can't hide the shit that's going on right now.
You can't
Rdbx.
kill Michael Myers.
By no means am I advertising a investment in Rdbx because it's crazy risky. It's shit nobody's ever fucking seen before. It's GME on motherfucking steroids. Like I couldn't even imagine we would get to this level.
That's hilarious.
That the SEC would allow a stock or a play or a company
you gotta admit, that's
to just,
funny.
they turn their back and say, go ahead, put that company out of business. We don't give a shit. Thank God for retail. Retail resurrected AMC. Retail is responsible for AMC theaters and buildings not being torn down right now. Thank you, retail, for resurrecting AMC theaters because the SEC played no part in resurrecting that company. Rdbx could be a different story because do you have a DVD player? I don't have a DVD player. I haven't had one in 10 years. Here's what's going on right now with Rdbx. So just so you guys know, the float on Rdbx is tiny. You can't hide a lot of illegal activity when your float is only 1,950,000 shares. The play as of right now, as I'm talking to you, is shorted almost 240%. Options expiring that could be exercised in the money next fucking week exceed the entire float, which will put the SI at over 300%. Where the fuck do you think all those shares? There is a Xerox machine running out of fucking ink right now, blowing through illegal synthetics.
Exactly. Exactly.
Yes, you can have legals through options, but come on. At some point, you have got to admit the SEC should step in and say, this is out of control. There is way too much illegal play going on with one fucking ticker that you can't hide. It's embarrassing. It's embarrassing for the SEC to just wear this.
It's embarrassing, all right, but
it's
to whom is it embarrassing?
This one's obvious now. Okay, you can hide AMC. You can hide the show 9, which GME is a very fucking small float. Guys, when GME, just to give you an idea, when GME hit 140% SI, we all freaked the fuck out, didn't we? Didn't we freak the fuck out? And then she shot to $500, right? Remember that? Guys, come next week. Rdbx, over 300% SI. That 300% shorted. Where are they going to get the shares? How in the fuck? That doesn't even take into account any retail owning this. Any big dogs coming in owning this. You see what I'm saying? This Rdbx shit could be the game changer. I don't know. For laws, new rules. This one right here is going to backfire. This is going to explode. Yes, it's probably going to explode and make a lot of fucking money for a lot of people. It's pissing me off because it's taken away our AMC play. Rdbx has taken away the AMC fucking money we should have had last week. All right, I was trying to avoid talking about it because I didn't want you guys getting all excited for that fucking play. But now we need to compare it to what we've all been talking about with AMC. You can't really find it. They're hiding the illegal activity so well with AMC. This one, they don't even care. This one, they're like, okay, we were able to get away with it so well with AMC. We already see the SEC just doesn't give a shit. So now let's not even hide this one. Let's not even give a shit, man. Let's just pulverize the fuck out of it with synthetics. Let everybody know the synthetics are lingering, salt and peppered all over this motherfucking company. Pull the rug on this company. Put this company out of business for fucking ever. Nobody gives a shit. I mean, this is their idea. They're trying to get it to zero. Why do you think next week the short interest is going to be over 300%? They're trying to get it to zero. Guys, cost to borrow. Okay? You think your 10 to 15% on AMC is the shit? Or you think like your 80, 90%? I mean, guys, holy fuck. What is it? It's 1,000%. Max right now. That's even the market makers and the lenders saying, oh, fuck you. We ain't got nothing. That's the lender saying, fuck you. We see what you're doing. There's no fucking way that you're going to be able to hang on to synthetics, whatever the hell you're going to try to do illegally, legally. We're not going to let you do it without you paying out the fucking ass for that activity. 1,000% max. I've never seen anything like this in my fucking life. This is okay. Everything going on right now, 30% legal, 70% illegal. You're gonna pay for it. You're gonna pay for it. All right. That's what's going on right now with Rdbx. It is blatant 70% illegal activity going on with that play. Market makers know, lenders know. They're trying to step in and slow it down. They ain't slowing down shit. They ain't slowing down shit. I don't know how this is going to end. I don't know what the fucking rip is going to look like. And I don't know how it's going to change the rules for AMC and GME. I'm hoping it does. I'm hoping something comes of this because you're going to be able to actually watch for yourself this shit play out right in front of us, possibly next week or the week after. I don't see this going on much longer. I don't see this shit going much further, guys. I don't know how much more you can, what can you do an SI? 1,000%? Can you short a stock on the books 1,000%? Is that even possible? Because it looks like that's what they're gearing up towards, and they're not even trying to hide it. Not even trying to hide it. Absurd. I'm fucking glued to this shit, man, because this is going to teach me so much about the AMC play. This should be teaching all y'all about the AMC play. Because it's right in front of you. It's not hidden. It's there for you to read. It's there for you to compare. Talk yourself into the AMC play. Look at what's going on with this motherfucking Rdbx and say, okay, now I get it. Now I fucking get the AMC and the GME play. There it is, man. Right in your fucking face. Rdbx. Y'all start paying attention to that shit. I'm probably going to do a shit ton of videos, man. If this continues to unravel and get out of control and the SEC doesn't step in, I'm gonna keep talking about this shit, man. Yep. This is headliner fucking news right there. This is a once-in-a-lifetime glimpse inside the most illegal activity ever on a fucking stock. There it is. Boom. You ain't even got to magnify that fucking shit. It is in your face. Y'all have an awesome fucking weekend. Doge Warrior out. Shaboom. Peace.
Okay. So, let's see where to start here. So, notwithstanding the merger and acquisition lockdown of certain number of shares, which I didn't have time to look into, but clearly we've got an SEC document that you know, there's more than 2 million shares in the float ultimately. I mean, that's the truth. There are more than, oops, the float is not normally 2 million. Okay, so that's a good place to start. Now, okay, he doesn't mention that. It's just the float is 2 million. It's tiny. Okay, so that's the first thing. Now, second thing, short interest 240%. The way that I, you know, let's just do an exercise here, okay? For a moment, let's forget about a percentage. Let's forget about the percentage. 240%, 500%, 1,000%. Let's not worry about that for a second, okay? So that 240 is irrelevant right now. But what we will look at is, let me see if I can get it to not show the percentage, but show the other part. I guess not, because it's next to it. 4.36 million. That's really what we're worried about, right? So, in other words, the float may or may not be 2 million. Well, I can tell you, it's not going to be 2 million. If they have 500 million shares authorized, the float is not 2 million. It might appear to be 2 million right now because of a merger deal that's in the works, whatever. I don't know why Ortex, well, I can't say that. I know why Ortex is showing it this way. And fucking Yahoo Finance is showing it this way. Yes, we know why Ortex is showing it that way, because Ortex is fucking FUD. Ortex is part of the fucking problem here. 100%. They love to show 200 fucking percent short interest because they know that it's going to get roid ragers like fucking Teddy Zane all fired up. They know it. They see it every fucking time. When some shit like that, oh, utilization's 100% for 87 days. Oh my God. They know uninformed investors, because that's who mostly uses their fucking shit. Period. Okay? I'm just going to say it. Ortex, it's unnecessary. It's irrelevant. None of this shit is actually accurate. It doesn't even say how many shares were borrowed and returned and all this shit. It doesn't even say. They don't even try. They didn't even try to give you that data. Okay, so the 200% is bullshit. It doesn't matter. That's irrelevant because the float is not 2 million. In reality. Yeah, effectively, maybe today it is. Until this deal goes through. But whatever, okay? Just roll with me on this. There are 4.36 million shares sold short. Let me say that is pathetic amount of short interest. That is, I mean, really? See, and this is the problem. Teddy Zane is not whatever enough, attentive enough, or discerning. He's too emotional, or whatever you want to say. He's not paying attention. He's not thinking about it clearly. He let his emotions of 240% take over, and he didn't realize that you're talking about 4 fucking million shares sold short. Oh, Scott, well, but that's a lot. It's still a lot. Okay. All right. Maybe. So let's go here. Let's go to the chart and look at it. So let me get this off here. Now I just put some lines on here. Don't worry about those. I'm going to zoom in. We're going to look at the volume. The volume Friday, was 74 million shares. 74 million shares. And you're talking about 4 million fucking shares sold short. Total. That's the short interest. 4 million. And you had 74 million traded Friday?
and there's going to be a short squeeze. Okay. Literally on Monday, it is a distinct possibility. And I'm not saying this is going to happen. It could happen. I wouldn't be surprised if it did happen. Monday morning, the short interest could be 0. 100% of those shorts, the 4 million, could have covered on Friday. 4 million out of 74 million. Absolutely could have covered. Now, who's saying that? Who's thinking about it from that angle? Nobody is, because they're all blinded by the 240 fucking percent, which is what they, and I use that very intentionally, that's what they want. That's what they want. They don't want you to think about it clearly and rationally. They want you to dump your fucking money into this shit. Into a fucking another dying ass company that nobody cares about. Nobody fucking cares about Rdbx. And I realize I'm starting to get fired up, but this shit is ridiculous. And the people who are least qualified and are least prepared to be giving this information out are the ones who are the most fanatical, the most overzealous. And that's fucked up. To me, that is fucked up. That's why I'm here, trying to correct this fucking nonsense. Because at the end of the day, I don't care what people do. That you can do whatever you want. But it should be that misinformation is called out and corrected. And it's just not enough. Even Chris Norland, who we like Chris Norland, we like his channel. But even he got the next point wrong that we're going to talk about here, which is a big one. It's a big one. Even Chris Norland got this one wrong. Strongman didn't. Strongman Personal Finance did not get this wrong. He got it right. I watched his live stream that he had a little bit ago, and he got it right, 100%. Okay, and that is when Teddy Zane talks about all this supposed illegal activity and naked short selling or synthetic shares or whatever the narrative is. He doesn't understand short selling, plain and simple. He does not understand short selling. Period. So it would be better with a visual reference, but let's just think about it this way. I have a share of stock in my account, and it's made available for people to borrow. It's being lent out. Somebody borrows my share, and they sell it short. So they sell it in the market. Somebody else is going to buy it. Now somebody else is holding my share. So I still have it. It's shown in my account that I own one share of AMC. This is true. One share of AMC. And in my account, it shows that one share of AMC is being lent out. And that's true. Okay? Whoever borrowed it sold it. So now there's yet a third person whose account says they have one share of AMC. That's my share that I hold, that the short seller also sold, that person, the third party, bought. Now that's sitting in their account. The market doesn't know. The brokerages don't know. They don't know that share, once it was delivered, they don't know that it came from a short sale. They literally don't know. The only time it's ever disclosed is when it's sold. It's sold, yes, it has to be marked as a short sale. But on the other side, when it goes into the other account from into the third party, they don't know. So now it's just another share that they are holding now. And that process can start again. That share can be lent again. And it's not illegal, and it's not improper, and it doesn't create a synthetic share.
creates a synthetic position, perhaps, but it doesn't create another share. There's one share still. There are multiple positions created from that share, but it's not a synthetic share. It does not increase the float. It does not increase anything. Because at the end of the day, let's say that it's lent out and shorted and bought. That's one cycle. And then it's lent out and shorted and bought. That's another cycle. And then it's lent out and shorted and bought. It's a third cycle. So it was shorted 3 times. All of those parties. So the person who originally sold it short and the person who bought it, and then the next short seller and the next buyer, and then the third short seller and the third buyer, all 6 of those people. That's 6 positions that have been created from my one share. It's true. It is. 6 positions created from my one share. Everybody along that chain is either profiting or losing based on my share. One share, 6 positions. Separate. 6 positions. But they're not synthetic shares. There's not 6 additional shares. We don't have 7 total shares now. There's one share that all of us have a position based on or economic exposure to. And at the end of the day, when all is said and done, person, buyer number C, the third buyer is going to sell the share. They're going to get rid of it at some point. So their position is going to go away. And the third short seller is going to buy a share back. So their position is going to go away. And so on and so forth until all 6 of those extra positions that are based on my share, they're all gone. And my share is returned to my account. And, now, and it's the same. Now, effectively, you could say, yeah, it quote unquote, increases the float. But it doesn't increase the float. It increases exposure to the float. It increases the number of positions that are based on the float, but it does not increase the float. It does not create a synthetic share. This is not, I don't know where this narrative started. I'm going to guess it started with Lou from Wall Street. Lou versus Wall Street, whatever. And that style of grifter, because they can sell that, it can be pushed, it can be sold, and it's a part of a narrative. Yeah, they have 2 books. Of course they have 2. Every fucking business has 2 books. Don't you know that? I'm from the streets. Yeah, I know that. So, anyway, but Chris Norland did not get that right. He got that wrong. He said that there should not be more than 100% of the share. So, if you do that, if that's how you get more than 100% of the float shorted. It happened in GameStop. It happens, occasionally. It's not common, no, but it's also not illegal. Oh, and here's an interesting thing, too. Robinhood, so this is from February of 21, last year, right after the GameStop debacle. Robinhood CEO says shorting the same share over and over causes a runaway chain reaction, and it's worth looking at setting a limit. Yes. Vlad Tenev, I want to say, I don't want to make an assumption, but it seems to me that the apes would agree with Vlad on this. He's hated by the apes, right? Okay. Now, this was last year. Who knows? But, yeah, he doesn't like it. He doesn't like it. I suspect the apes don't like it. They don't understand it. They don't like it. But the apes and Vlad, they aren't that different. So, now, with this multiple shorting of the same stock, any of those parties at any point in time can exit their position. So I could sell my position. I say, I'm out. I am out. And I could sell and get paid for that share and be done with it, and that's it. Anybody along the way could sell or close their position. The short sellers would have to buy to cover. But they can do that. And it doesn't necessarily affect the other side because the shares are non-fungible. Or they are fungible, or I forget which way that is. But in other words, it's not a unique share, so they are fungible. It's not a unique share. It's just buying it from the market, selling it to the market. So when the short seller buys to close, they just go out and buy a share. They go buy a share. The person they sold a share to, they still have that. And it'll be delivered to that account. So it's not, it is a little bit of a mind fuck. But at the end of the day, I think the best thing to remember is that it's temporary. It's temporary. It's a temporary economic exposure to a share. It doesn't create a synthetic share. It's not naked shorting. This is a terribly ignorant take. And I'm a little disappointed Chris Norland didn't get that right. He said there should not be more than 100% of the float shorted if there's no funny business going on. I just paraphrased what he said. And that's not true. There can be, and it's not illegal. So I wasn't a professor for 10 years, and I'm not pushing 50. But, I just read about it a lot before I ever started talking about it. That's the way I roll. Just keeping it real. A couple other things about this. Options expiring. Oh, the options expiring in the money is more than the float. So what? It doesn't matter. Those options are not going to be exercised. 5% of them might be. Besides, the float is not 2 million. We already talked about that. It's more than that. Happens to be 2 million now because of the merger. Also because Ortex is a piece of shit FUD spreader, and they love the triple-digit short interest. But forget about the percentage. That's my advice. Forget about the percentage. How many shares are actually shorted? How does that compare to today's volume? Oh, it's like not shit in comparison. Well, yeah, you should be able to know that. You should know that. You should be able to make that comparison and say, wait a minute. They're hyping this as being way overshorted, but it's only 4 million shares. Yeah, and what can I say? That's the kind of shit they do. That's the kind of cherry picking and selective information they give. A couple other things real quick here. He mentioned that Rdbx, they're trying to short the company into the ground. They want to make it go bankrupt. And then he talks about how antiquated of a company they are. I don't even have a DVD player. Okay, so which one is it then? Sounds like you don't care if they go out of business. Oh, but I want to get paid because I'm taking this extraordinary risk buying the stock. That's a dumb narrative. It's brain dead. That's a stupid narrative. You're not an investor at that point. You're fucking you're in a casino. You're pulling a slot machine handle and hoping that you win. But to me, that there's no skill in that. And that's the same thing with this. Like, oh, I don't, what's a fucking DVD? What's a Blu-ray? I don't even know. I haven't had one of those in 20 years. Okay. But it's just terrible what they're doing to this company. Like, be more hypocritical. And your take is wrong from top to bottom, front to back, asshole to elbow. Okay, yeah, there's a problem here. This is the fucking everything bubble. This is a shoe shine boy. I always talk about. This is the shoe shine boy bubble. Johnny Pizza, giving stock tips essentially. So, his fan of history, and go back and look at the 1929 bubble, 1920s. But real quick here, he said that if it weren't for the apes, that AMC would be bankrupt. If it weren't for retail investors, Rdbx probably would be out of business. because the SEC didn't come in and save them. The SEC didn't come in and save them. So the problem with that is it's not the SEC's job to make sure that companies don't go out of business. I mean, this is a basic thing. It's a free market. I mean, you can argue that or whatever, but at the end of the day, it's not the government's job to make sure that companies don't go out of business. I mean, companies have to go out of business. That's something that has to happen. That's why a lot of us are against the notion of too big to fail and that whole thing. And I don't want to get into 2008. I really don't. But that's where we saw that. You hear that rhetoric sometimes. Too big to fail. Rdbx obviously is not too big to fail, but that's a natural function of a market. Nothing lasts forever except diamonds. And that's even debatable. But companies come, companies go. Everything is cyclical. We die, we don't last forever either. So it's a natural thing. Yeah, maybe it would be, if you allowed yourself to be emotional about it, maybe it would be upsetting. But don't get attached to that shit like that. At the end of the day, it's a company. They don't care about you in that way. So why are you pretending like you care about them in this way? And the SEC stepping in, okay, is that what we want? That's what we want. We want the SEC to step in anytime any companies any way in danger of not persisting forever. Like, that's absurd. That's not what we want. That's not what anybody wants. And we'd still have Circuit City. Fuck that. We'd still have H.H. Gregg. We'd still have Blockbuster. Now, people are going to get emotional there. But who has a VCR? I mean, I know some parents do, grandparents. I don't have a VCR. I do have a way to play the DVD. I have a laptop that's got a DVD-ROM drive in it. So I can at least say that I can play a DVD. Oh, and I have a tower server machine here that's got that too. But, when's the last time I used physical media? When's the last time anybody used that type of media? Really. It's like, who still uses an iPod? Who has copies of their music locally on any device anymore? Can you imagine all of the different iterations of that shit that we've had over the years? Cassette, CD. I had a mini disc player, player recorder, mini disc man by Sony. The early MP3 players, iPods, cell phone. And then now, finally, a streaming service. So is it sad that iRiver isn't around anymore? The SEC should have stepped in, I guess. Last thing, how long can this go on? They always say this shit. I don't see this going on much longer. This cannot continue. Well, really, guess what? AMC still is. GameStop still is. Because you guys because the influencers are prolonging it. They're insisting that, the squeeze hasn't happened. So I find that to be very disingenuous. How long can this go on? I don't see this can go on very much longer. But he'll sit there and literally a year later, well, he wasn't saying it a year ago, but short the VIX will literally a year later still be saying the same shit. He'll have the same half a dozen catalysts that he rotates between, and he's laughing all the way to his Cash App account where he's, collecting money from different streams of revenue, all based around this narrative. Okay? So there it is, Rdbx. Total bullshit. I'm not gonna say it's not gonna squeeze. I don't know. I have no idea, and honestly, I don't care. I don't care. I couldn't care less. However, what I do care about, and what I could not care more about, is misinformation and snake oil peddling, grifting, and people making false claims, people hyping percentages that really have no business being hyped. All that stuff creates this emotional, facade, emotional appeal, and that causes people directly to lose money. That's bullshit. It shouldn't be allowed, I don't think. The SEC needs to do is crack down on this shit. Seriously. I would support that. We should want, truth and honest efforts to be rewarded, not people like this who are just putting out whatever they have to say. And I'm not, maybe Teddy Zane actually believes that. Maybe he believes this shit. Okay? Well, I didn't see any facts. I didn't see any research. I didn't see any DD. I didn't see anything other than speculation and hype. So it at this point, to me, I'm a very skeptical person. I'm a contrarian. I question everything because I've seen it over and over and over and over where this plays out. It's not any different this time. And you can sit there and say that you think it is, and that's fine. Again, I don't care what anybody does. I'm going to call out the people, the source of this information, the person who is saying that this is going to be, they are trapped with 4 million shorts. All right, go fuck yourself. Seriously, go fuck yourself with that. 4 million fucking shorts. You fucking cum guzzler. All right, so what else have I got on my list here? I haven't even been looking at the chat because I've just been in a zone. But let's see. 150 million AMC moved on some days, and it did not run at all. If this is true, sell-off will be quick. Yeah, I mean, I'm not sure what that's referring to. As far as shorts covering, it's just more of a theoretical. It could have happened. You have 4 million short interest. You had 74 million volume yesterday. That's not being trapped at all. And there could be more short interest on Monday, but that it's that number that matters. That percentage is for the birds. It doesn't matter, especially when you have other sources that are saying literally, oh yeah, it's 35% or whatever. That's because they're using a different float figure. So there's Ortex being a little cunt, or probably a fat cunt, because they're Wall Street. They're fat cats. My cat's fat, but he's not a Wall Street cat. Blu-ray reading scratched Rdbx discs. Rdbx is a solution to slow internet. So I feel like that's an insult to me here. When high-speed internet. Rdbx is dead because DVDs are dead. Market Moonlord initiated Rdbx coverage with a buy. Moon phase analysis is promising. Okay. All right. Model 3 dude has a Betamax and a mini disc. Right on. My dad had an old reel-to-reel stereo reel-to-reel tape recorder deck, I guess. And I remember, playing around with that when I was a kid. It was fun. Vinyl is better than streaming. That's what they say, isn't it? However, I'd like to see you go running. I'd like to see you running with vinyl. Now, I'm sure that Elon Musk could figure out a way to do it. That's what he should be doing with his time and talents. Figure out a way that I can go on a run listening to vinyl. Figure that out, Elon. And I would agree with that. Vinyl's the only way to listen to Frampton Comes Alive. That's probably true. So I grew up in Cincinnati, Ohio, and Peter Frampton currently resides in Cincinnati, Ohio, or at least he used to, in the Southwest Ohio area. Just dumb trivia. On the highway to the danger zone. I'll take that. Anyone with common sense, including me, this is Tony DeNaro here. Hi, Tony. Anyone with common sense, including me, is saying shorts on Rdbx could cover in 30 minutes. Stupid play, highly speculative. Yep, that's the conclusion we came to. I mean, I hadn't even really looked at it until I saw these videos start coming out today by this guy. And, and extremely super extra, wildly, incredibly, ultimately bullish takes that it was getting everywhere on Twitter, its own subreddit, Rdbx subreddit. I mean, and this is it's just, that 223%, man, that is really, ortex is a problem. Okay, I'm going to go out, I'm going to say it. I don't know if Tony agrees with me on that or not, but there's no reason, and supposedly somebody tweeted to ortex and they actually responded, which they never do, but they responded and they stood by their free float calculation. They stood by it. I really have a problem with ortex. I think ortex is responsible for a lot of losses. Ultimately, the data that they put out, it's not useful. It's not useful. And that's exactly what I was saying too. I mean, I didn't hear anybody else say this. And there is nothing at all to that take. It is common sense, like you said, Tony. It's 100% common sense. I don't have time to listen. I don't need to listen to you, Tony. No offense, I don't need to. But but that's good. I'm glad that you have. I have not heard anybody say that. But I also haven't been looking for information on it at all. So, but it seems like the sentiment is overwhelmingly bullish, which, notwithstanding any of the short interest information or anything else, that's a red flag to me. Just that simple fact that everybody is on that side. Oh, yeah, all right. That warrants at least a standard amount of due diligence. I mean, come on. Why? So, yeah. And I call it, these secondary, tertiary squeeze plays. I don't know. I'm not going to say, I'm not conspiratorial enough to say that it's happening because, or the intention is to distract people from AMC. But I have seen them say, I'm getting in Rdbx, fuck AMC, I'm done with GameStop, yada, yada, yada. I've seen that in comments and posts and whatnot. Especially at a time now, when this is dragging on and on and on. Who knows? Maybe it just naturally happened now. I probably did. But, it's kind of, I don't know, serendipitous in a way. Anyway, but, it's good to know that, other people are recognizing this. Like I said, there's nothing to it. There's nothing to a lot of this stuff, most of it. In fact, it's not really that hard. What you have to do, what is hard though, is turning off your emotional response, or recognizing when you're running on emotions and being able to, rationally remove that from your decision making, because these apes can't do it. They cannot do it. If I'm not a grifter. I don't want to mislead people. But it wouldn't be that hard to do. It would not be that hard to do. A guy named Boss Blunts does it every day. You know, these guys, they don't care. They're in it for the money. Period. For themselves. I think that's wrong. You know, I will always try to seek out what the objective truth is. What can we verify? What's objective? What's evidence based? That's how real shit works. You know, that's how our society, that's how our world improves. With evidence-based information and knowledge. That's if nothing else, that's what we humans can do that apes and primates and animals cannot do. So reclaim your humanity and your critical thinking. Okay. Let's see here. What I got left here? When Tony versus Scott AMC MOAS debate. Yeah, I don't know about that. I don't know about that. We'd have to do it on my channel. Where's my image? Here we go. Let's see here. Okay, so maybe Tony can tell us about the share dividend split. What's up with that? I can't find any information on it. Tony doesn't use the word MOAS. The squeeze? I think I've heard you say the squeeze or a squeeze. But what's going on with that GameStop dividend? Supposed dividend split that was not actually ever proposed yet. On Super Stonk here, better or worse. So this person thinks it's will be delivered July 4th. Dividends can be distributed any day, including holidays. Okay. Share dividend conversion chart. How rich are you going to be? Oh, that sounds useful. Yeah. Oh, look at that. It has all these different terms on it because you don't know literally which one it's going to be. Because there's no dividend that's actually been, no share dividend that's actually been proposed yet. Imagine that. That's funny. So let me give you all the common ratios. Why would you need that? Okay, anyway. GameStop is planning a split up. Well, maybe they need to strike up. You ever thought about that? I don't think anybody knows. I don't think there's any information about it. Unpopular opinion. Okay. No info on GameStop. Yeah. I didn't think so. I don't know. I mean, Al from Boston sure was pushing that timeline. Mike Myers rewatches Austin Powers. Can't kill him. Richie Rich on here says, these Rdbx numbers are really hard to believe. I can't help to think this might be a trap. They're just wrong there. but I'll look past that because this sentiment and tone here. They're just waiting for the volume, then possibly rug pull it. Model 3 dude said that. I mean, and here you go. Like this person made 132% yesterday. That's great. Nobody's saying that you can't make money on anything, or that it's not going to go up or down or whatever. It will do all those things. It will go up and go down and go up and go down. And if you know how to trade, you can make money on it. That's not what's being said here. it is not being said that it's not going to go up. It's not even being said really that there's not going to be a squeeze on it. I'm not even saying that. I don't know. If I had to guess, I'd say probably not. But that doesn't mean it's not going to go up. So you could still make money, and it could still be a good move, especially if you trade options, and on the way down too. So let that be made clear that, nobody's saying to, trade this or don't trade this or whatever. It's just simply the fact that, hey, a lot of information in this video was incorrect and inaccurate, and it makes the same sloppy mistakes that have been made for a year and a half. When the first time a stock had more than 100% of the float shorted was, and I don't remember too much from that period, but I don't think it was really. I mean, I remember it was kind of hyped in the media, but it wasn't like, oh my God, it's naked shorting. Oh my God, it's illegal. Oh my God, it's fraud. That came later on as this thing, as there was a run up and a run down and then another run up and, these up and down pump and dumps, whatever. And then as time wore on, I mean, correct me if I'm wrong, that's when the narrative really started getting like, oh, this is criminal. Oh, no sell, no sell. Okay, well, prepare to hold it to zero. Then that's all I got to say. Prepare to, and the apes are okay with that. So hey, fine, works for me, works for them, works for me. It's fine. I don't care. It's not my problem. But what is a problem? I mean, individual retail investors can do whatever they want. Most of them, a lot of the time, a lot of people lose money because they've run. This is Scott's interpretation based on my experience too. Because they let emotions take over and they make irrational decisions because they're not thinking from a logical, evidence-based standpoint. Like, you're not thinking scientifically. You're not thinking mechanically. It's a word that's used a lot, So the apes are just, they wear their emotions on on the outside of their coat. Everything's emotional. No sell, no sell. Oh, okay. We're going to take away their lifestyle. No, you're not. That shouldn't even be. Why are you worried about somebody else's lifestyle? That's not how you make money in the market, my friends. So anyway, let's see here. Let's see. Does Masslorian know Tony is over here slumming with us? Come on, let him state his position. Debate is just that, debate. I'll do anything if it's decided. People can figure out. He's not even here anymore. He's not in the chat. Tony did not. Oh, there. Well, he is. There he is, but he's not in the list of participants. Now he is. Yeah. Okay. I can't figure out how Rdbx has 12 million shares, but Apollo MGM owns 36 million shares. Yeah, we were looking at that earlier. Yeah, there it is right there, Apollo. So they actually have 45 million shares, 45 million. And it's an issue of class of shares. So if we come over to this SEC filing here, we can see, gotta get to the right section. That was it, actually. There's so many different sections in here, but right here, Class A common stock. Now, also keep in mind, they have 50 million shares authorized of Class A and 100 million shares authorized of Class B. And they go through the terms, different voting par values and all that shit in a different section. But there's 12 million Class A issued and outstanding, and 32.7 million issued and outstanding of Class B. So that's where you get your total of shares outstanding of 45.389 million. And then we could take out our 16.1% of insiders. That's out of the 45 million total. That's the total outstanding. So, and that will yield about 7 million, which jives with the information over here on FinViz. I went ahead and added up. Where is it? No, not FinViz. FinViz didn't have it. Fidelity, insider transactions. And it's going to, oh, okay. So I went ahead and added up all these shared numbers here on both pages, and it comes out to about 7 million. So that's the 7 million. It took me a minute to get it straight, especially because if you come over to Yahoo Finance, oh yeah, of course, share statistics, float 1.95 million. 16.1 held by insiders. Yeah, we that's Fidelity says that too. 345.72% held by institutions. Okay. All right. Yeah, sure. Shares short 4 million. Short percentage of float 37.58. That's where Ortex becomes Wall Street scum. They are misleading intentionally. Why is it over 200%? Makes no sense. It's manipulative. Wall Street nonsense, garbage. Total fucking garbage. Peter Hillerberg should be ashamed of himself for the product that he puts out. I mean, it's ridiculous. It really is ridiculous. It gets me really fired up sometimes. And I've used Ortex. I had the trials. I would never, ever recommend that shit to anybody. Even the interface is janky as fuck. It's one of the worst interfaces, user experiences I've ever used. I will never, ever not take an opportunity to trash Ortex. In fact, it was one of the funniest things last fall. Let's see if I can find it. I think I have it on this computer. I was looking up Ortex and trying to, I was just looking up Ortex and different things. And I found there's other Ortexes. Ortices? I don't know how you say it. But, let's see if this is it. Well, yeah, it kind of is. There's this one. I know, okay. So I was just looking up Ortex, and I found this Ortex. And I modified it a little bit. But this is a different Ortex, and it's more akin to Orkin, than anything. This Ortex was a pest control company, and I thought that was funny because, yeah, they are a pest. They're a parasite. Ortex. I modified that logo. It used to have a bug clip art in this O. I took it out, but Ortex. Guaranteed. Right. Guaranteed you'll lose money with Ortex. Okay, last thing here is a weekly option trap. So this is just uninformed option trading. Here we are again. This week saw a high of over $14 and a low of less than $12. And it's looking like, and this is from Friday, and it's looking like it's about to close like a big fat fucking red doji. A big fat middle finger. I guess it's just clip art. I don't know. I'm in old Reddit mode. They flailed the price all over. They flailed the price all over the place last week. If anyone diamond-handed options, which, oh, God, that right there, if anyone diamond-handed options, I mean, that's, what business do you have talking about options if you use this type of terminology? Everybody knows the rule of thumb in option trading is always be closing. You don't, if you see profit on your options, 9 times out of 10, it's better to go ahead and take the profits, and you can open another position later. That's why it's good to have more than one contract. But diamond handing options until expiration day is a good way to be holding the bag. So always be closing your option positions. That's all on that. If it goes to profit. And I struggle with this too. God, do I struggle with that. But, you know, it is what it is, you know. At least I know. So we got another pest control here. This pest control. Citadel pest control. I don't know who the hell made this. Manny made it or what. Citadel pest control. Fantastic. Oh, man. That cockroach, though. So, anyway. Yeah, always close that shit. If anyone diamond-handed options they bought this week, they got fucked. Well, no shit. I could have told you that. I did. Both on the call and put side. Yep. Oh, yeah. We've said that before many times. Because the price, as of this typing, is looking like it's about to close exactly where it opened. Sweet. Oh, it's a real business. Wow. Meaning the only people who won are those who sold the weekly options players their weekly option contracts. And this is why some of us scream about option traps. They are a very real thing, and they use them because they work. It's how they stay liquid and how they get to keep playing these stupid games. For those who played smart, bravo, well done. I hope you sold your calls at the peak and your puts at the valley. For those who held your options till they expired worthless, I hope you learned to stop doing that. Don't worry, they didn't. They didn't learn. But the problem here is that, you know, buying calls and buying puts, like just buying the contracts, is probably the riskiest strategy that you could use. Now, it's a valid strategy, but it's one of many strategies. And this is the thing that, you know, I can't imagine being an ape, you know, getting into this play, this community, if you want to call it, and trying to learn how to trade options and not just losing my fucking ass. Like, that's what I'm sure has happened in the overwhelming majority of cases with these people. I mean, yeah, of course, there's going to be people, there's going to be outliers, there's going to be some people who do really well, there's going to be some people who break even, but I know option trading, I know that a lot of people got really, really, really deep in over their heads, and they watched their shit go to fucking zero. They did. You know, and yeah, you know that it's a trap, but you keep buying it. Good point there. So, you know, but the thing is, though, you know, it's not, that doesn't have to be like that. So they say that the price is looking like it's about to close exactly where it opened. meaning the only people who won are those who sold weekly options. Well, that's not true. No, that's not true. And let me show you what I mean. So we use this here. So I'm going to go to this website, Option Strat. I've shown it before. It's it's a good site for option strategies. So we click on build, and you can see all these different strategies here. Now, long call and long put, that's literally buying a call and buying a put. So that's one of dozens of strategies that can be used here. So, this is not a comprehensive option trading course, but I just want to show that there are ways that people can profit from a stock going sideways. That's really what I want to show here. So let's say we have this long call butterfly strategy, okay? And you can look at this little blurb here about it, okay? So what we're doing is we're combining options. We're going to buy 2 calls out of the money on each side. That's A and C on this chart here, A and C. We're going to buy a call in the money. We're going to buy a call out of the money by some distance. Then we're going to sell 2 calls at the money. So whatever the stock is now, it's AMC's 12. We're going to sell 2 calls at 12. So we're going to trade 4 options all at once. That's a combined option strategy. And we're going to end up with something like this. We're going to buy a $7 strike, and we're going to buy a $17 strike, and I'm going to just shift this down to next week's expiration. And I'm going to bring these in a little bit, and you can play with all this stuff. You can slide it around, and you can get things set up the way you want. And you see that the numbers change. The maximum profit changes, and maximum loss changes, and whatnot. We can make these wider if we want. What happens then? The amount you have to pay goes up, but you don't really have much more that you can make. So let's just say, for whatever reason, you think that, and this is where you get into, if you think it is going to go up, you can buy a call. If you think it is going to go down, you can buy a put. Those are valid strategies, but that's not the only thing you can do. Now, what if it goes sideways, though? Sometimes things go sideways. Well, that's what these types of strategies are for here. And it's calling it broken wing because I adjusted it. Get it to, there we go. All right. I just wanted to be, literally be a, no, not a broken wing. I'm just going to redo it. I got it all screwed up. There we go. Okay. So right now, I'm going to leave it like this. We're buying 10 and 15. We're selling 2 1250s. So we're going to trade all 4 options in one order. And now all that's going to come out to, we're going to have to pay 124. So the 10, we're going to buy it for 250. We're going to buy the 15 for 24. So that's on the buy side. We're going to sell 2 of these 1250s. They're 75 a piece. So the difference between all 3 of those strikes is we owe 124. So we're going to pay 124 to get in this trade. Now, the maximum profit, and this is where things get a little different from typical call or put, naked
long call and long put. Long calls have an unlimited profit potential. Long puts have a finite profit potential because you're shorting it, essentially, and it can only go to 0. We have some other defined profit or profit limited strategies like these, butterflies or spreads, but it also limits your losses and it costs less to get into the trade normally. So again, let's say that we thought, like this smart ape here, we see that it's going sideways. It's probably going to go sideways the rest of the week. And if you had to bet, you would bet that it is going to end where it started. You can set up this option strategy for that. And let me put it on the graph here. It'll be easier to see. So what we're looking at is the profit loss graph for this option strategy. Now, it expires next Friday at 4 p.m. But we can see what the graph will look like at any point in time between now and then. And you can see that it does change, right? Because options have a time component to them. They change over time. And they have a volatility component too. And that changes the values. But again, we're not getting into all that. Just going to look at expiration. So on next Friday, if you pick this strategy up, say I think it's going to be at 12.50 on Friday. I'm willing to risk $124 to make $126 if, and when do you get your maximum profit? If the stock is at that price, $12.50, where you sold the 2 calls. So if it goes completely sideways all week and it ends at $12.50, you just doubled your money. So this is a neutral trade. We could also have trades where, hey, I don't know which way it's going to go, but I know it's going to go in one direction by a lot, right? I don't know which way it's going to go. It's either going to go way up or way down. Oh yeah, there's strategies for that, of course. So we have something like a strangle or a straddle. This is something I use fairly often. Either at the same strike price, normally at different strike prices, so technically a strangle. But we got this event, CPI data, or Fed meetings, stuff like that, where a lot of volatility is probably likely, but who the hell knows which way? We could have good data and the shit could go down. We could have shitty data and this shit could go to fucking all-time highs. Who knows, right? It's irrational and it's retarded sometimes. So why not buy a call and a put and see what happens? So we can change our range here on AMC. So we're at 12.50 now. Buy a call at 12.50. Buy a put at 12.50. And then, depending on what happens. See, the problem with this is you need a big move in either one of the directions to because one of your options is going to be worthless. So if the price goes up, your call is going to gain a lot of money, a lot of premium. But the put option is going to lose all of its premium. So you have to be able to overcome that worthless option. So it's a little bit risky in that sense. Or one thing that let's say I have mostly a bullish bias, but I also want to be protected in case it fucking crashes. So I maybe do something like this. Put the call a little bit out of the money, put the put a little bit further out of the money down. So now I'm paying less. I'm only paying 62 to get in this trade. I'm biased to the bullish side. I think it's probably going to go up, but if it crashes down, I'm not going to, of course the call is going to get fucked. But if it really crashes down, I'm going to start making money again
on this, on this other side here. So that's something that you can do. And there are also just, your typical call spreads. So this would be buying and selling a call right next to each other. Essentially, how wide apart they are determines how much your potential profit is. But let's say that you're bullish on AMC. We could imagine that somebody might be. So what you're going to do is you're going to buy a call. You're going to buy a call, and you're going to sell a call. You're going to buy a call out of the money or in the money, but the lower of the two strikes is 13, and then you're going to sell one a little bit beyond that. So there's $2 in between these two strike prices, 13 to 15. So essentially, what that's telling us is our total profit that we can make is $200, because 13 to 15 is $2 per share, $200. Now we have to factor in what we paid for this, which is 34. 200 minus 34 gives us 166. So think about it. You can spend $34 to set up this trade. If it goes and if it goes your way, and here's the ultimate graph of what it would look like. What you want is you want it to be above. You want it to be either in between these two strike prices or higher. And then ultimately, at some point, you're going to make the maximum. You're going to make 166 no matter how high it goes. But it's not going to keep going up, So you have to set these strike prices to realistically where you think it will be and all that. But as long as you're over 1330, it's hard to get right on it, but 1335, remember 1334, because remember we paid $34 for this, so we just have to factor in that 34. As long as you're over 1334, you're going to be in profit. Now, yeah, you can only cap it gets capped at 166, but hey, you could buy 3 of these for less than 100, for around $100, and now you're looking at making a lot more if it goes that way. So this is a defined risk and defined profit strategy. A little blurb on it. It's a vertical spread or bull call spread, or known as sometimes people call it a call debit spread. But you want it to be above, ultimately to make maximum profit, you want it to be above the second call strike. But there's a range of profitability there. So these are option strategies that are more complex than just buying a call or buying a put. However, look at the difference in what you're paying. You're paying $34 to get in this trade. Now, we could tighten these up and look at this. Now, you're spending $19 to make $131. That's a pretty good profit ratio. In fact, we can look and see. That's a 689% return. Risk 19 to make 131? Are you kidding? So these type of strategies, particularly the bull call spread or call debit spread, and the put debit spread, which is the bearish version of this with puts, so this is the opposite essentially. Yeah, bear put spread. So this is the opposite essentially. These strategies are the first strategies that I really learned how to trade, and when I started trading options. I would never trade just a long call or long put. I would never do that, especially, not now, but as a beginner option trader. As a beginner option trader, it never even crossed my mind to just buy a call or buy a put, because those are expensive strategies. They're very risky, and you can lose everything. You can lose 100% of the position. Most options expire worthless. And that just seems like, you know, kind of shitty. But here was a way that you could, you know, I mean, shit, here's one. Oh, no. Yeah, it gets a little funky on the other side because volatility is so wacky on the puts, but you know, risk $6 to make $94. Now, it's probably not going to work, but risk 19 to make 131. It's the same type of deal. So I recommend looking at option strat, playing around with it, you know, just clicking stuff and trying these different things out and looking at all the different things you can do. You know, do you think it's going to move in one direction or the other? Do you think it, you know, do you think that it's going to go up? Do you think it's going to go down? Do you think there's more of a, you know, chance it could go this way? Do you think it's going to be, you know, by the way, they do have a short, synthetic short, which is pretty cool. It has nothing to do with short selling. It is an option strategy. But, you know, you buy a put and sell a call at the same strike price at the money, and you get the profit loss profile of buying 100 shares of stock. So basically, you know, and we could do this synthetic long too. So now we're going to buy a call and sell a put at the same strike. But, you know, if AMC is at 1241 now and it goes up to 21, well, yeah, you're gonna make about $1,000, just like you would if you had 100 shares of stock. Pretty cool. So you need a little bit of margin to do this, but you know, point being, there's all kinds of other stuff on options. Don't ever think that this is the case. Like, the only people who won are those who sold weekly options. No, absolutely not. People who, and I wouldn't even say win, okay? It's not a game. You're not winning or losing. You're profiting or losing, you know, money. But I don't like the term win in here. I'm not winning money. I never think about it as win. And it's probably too emotionally charged too, but, you know, the people who made a profit, that's better. People who made a profit, they put the time in to learn the strategies and try different things out, and they didn't jump to something that had the most, it's unlimited profit. That's what I want. Well, with unlimited profit comes a lot of risk. Not an unlimited amount of risk, but it is still a limited amount of risk. It is limited, so that's good at least, but, you know, these are expensive strategies. But spreads, butterflies, iron condors, iron butterflies. There's so many good resources out there on YouTube, which is basically where I learned how to trade options and whatnot, just reading different resources. But I wish the apes had started with spreads. Seriously, I wish the apes had started with something other than just buying calls. You know, options are, let's see here. Let me go back here. I didn't even read this. Options make Lynn very suspicious. I mean, yeah, it just takes a while to wrap your head around it, but I think that you can get over that. It feels like the most casino-like of all the market. I think that's probably because the returns are not linear. That's the difference. Stocks, It's a linear return, right? It's the same. If it goes up $1, you make $1. If it goes up another $1, you make another $1. With options, it's non-linear. So, in other words, it is exponential, essentially. Let me get on something that's going to show it. Just a straight up call. Might be able to see it. You really have to go in. I can't get zoom. I mean, it's only going to give me 74%. But maybe we can see it here. So from 14 to 15. We're going from 75 to 175. Okay, no, it's not going to show it. All right. Well, we can do it with the Greeks then. So, without getting too far into this, these numbers tell you different parameters about the option. So, delta is telling you how much is it going to change if the AMC stock price changes. So, if AMC goes up $1 or down $1, how much premium is the option going to change by? And this is 51.8, and that's $51. So if AMC goes up, by $2, you would tend to say, well, okay, yeah, it's 58 per dollar, so 2 of those, it's around 100. And that's true, but there's also, this is calculus, there's also a second order, there's a second derivative, gamma, which tells you, okay, how much does the delta increase as we go up, right? So not only, are you making $51 per dollar, it goes up, that number, this delta number, it increases, that it itself increases by 20 every dollar the stock price goes up. So it's actually going to be 51, 71, 91. It's going to go up. So that's where it gets exponential, or parabolic, essentially. I know that's probably confusing, but it'd be easier if I could just draw, on a thing. Where is it? Too many tabs. I can't see anything. With a stock, it's going to do, one of these where it's like more or less a straight line, linear, but option's going to have this type of, more of that type of look to it, where as the price goes higher down here on this axis, in other words, the amount you make from here to here is from here to here. That's terrible drawing, but that amount, this is greater than the amount that you made down here for the same amount of change. So that's calculus, rate of change. It's fucked up, but it can be very lucrative. Now, to your point about what was it? Scam, casino-like. There is that aspect for sure, but that's kind of the point of these other strategies. I mean, yes, at the end of the day, it's a bet. You're saying, I think that it's going to be this in the future. You are saying that. But that's one way to play it. You could also say, all right, well, I really like this stock. Whatever it is, IBM. I really like IBM stock, but I don't want to buy more of it now because it's too high. It's too high. But if it were to go down, to 120, I'd buy it. And this is what Paul was saying on that Everything Money clip last night we looked at. It's too expensive now, but I would buy it at 120. Okay. So You can sell a put option, and here's another way you can use options, like insurance, hedge, and say, all right, if AMC or whatever goes down, IBM, if IBM goes down to 120, somebody who bought that put, they're entitled to sell 100 shares to somebody. And I'm saying, if it goes down to 120, I'm willing to buy 100 shares. So you're locking in a price of the shares that you want at a lower price than what it currently is by selling a put option. So it's always the opposite of the other side. So call is bullish. If you buy it, if you buy a call, it's a bullish position. If you sell a call, it's a bearish position. You want the stock to go up. You want the stock to go down. Like a put option, long put option, is a bearish position. But if you sell a put, it's now a bullish position for you. You want it to go the other way. So that's yet another way to use options as insurance and hedging and locking in a certain price that you want to pay. So it's very diverse. It's a very diverse thing. Some things are more speculative, but not all. And that's the stuff that's more fascinating to me, is the stuff that is speculative. But that's just me and my fucked up sense of everything. But it doesn't have to be casino-like necessarily. And at the end of the day, is it not casino-like anyway, buying a stock? It could go up, it could go down, you don't know. The thing about options is there's a time component. So not only do you have to pick the direction of the market, which is nearly impossible. Literally, like, you get lucky sometimes, but so many times not. But there's a time component. You say, okay, I think the AMC is going to be at 75. When, though? Next month, or 3 months from now, or next year? And that determines what position you're taking. So that time component is with a stock, it doesn't matter. You buy it, you have it, it doesn't matter. It's not losing value over time inherently like an option would. So 3 7s and 5 7s on a slot machine. Three 7s, a jackpot payout. 5 7s, mega jackpot payout. Like, that would be like when I double or triple down on a position that's and call position that's losing. I'm already in a red, but then it starts to reverse, and I'm pretty confident that it's gonna shoot back up. That's when I double or triple down. Because now I'm not moving $51, or now I'm not moving $33 per dollar it goes up. I'm making $33 on every dollar. I'm making $99 on every dollar. So if it goes up $5, I just made $500. And actually, it's going to increase too because of gamma. So that's about as speculative, casino-like as I get. So yeah, let's bring it all back home here, because I'm going to shut this down soon, the stream. And by the way, see, there's a decent amount of viewers here. If you don't mind, if you appreciate what I'm trying to do here, go ahead and hit the like button, thumbs up, and subscribe to the channel. So and get up past my substantial resistance point that we're battling. We've been battling this resistance for a few days now. And we'll bust through, no question. But somebody just unliked. It just went down from 10 to 9, and there's 10 again. Okay, it's funny, but this channel has always been focused on trying to call out and fact check, and for lack of a better term, bust the ape influencers. And I have no agenda, and boy, that's all messed up. That chat window was all messed up because I resized it. Oh well. Oops. I'll just read it. At least we are not under the delusion that Rdbx is a distraction to get everyone to take money out of AMC, which a well-known grifter whose photo is not him, nor is his accent applicable, is saying right now. So that's what Al's saying, apparently, which sounds about right. But I have no other, I don't care what anybody does with AMC. I don't care about AMC. Just to be honest, I don't care. It could go up, it could go down. Maybe I'll trade it, maybe I won't. Doesn't matter. There's plenty of other stuff to trade. So that's not the point. Point is not to, spread misinformation or get people to question things, other than the things that need to be questioned with evidence. But I always love that, like, oh, yeah, you're just trying to get me to sell my shares. Why would anybody care if you sell your shares? Like, seriously. It has no impact on anything. Except, maybe you won't continue to rack up losses. But, I thought the point was to make money, personally. I thought it was. But we have this neurodivergence. I hesitated to use that word. But I did. Neurodivergence, because there's something wrong here. There is something wrong. And I don't know what it is exactly. I mean, of course I know what's wrong. But overall, like in a larger sense, there's something off here. Something's wrong. It should not be like this. And I don't know if it's a social media thing. I don't know if it's an education thing. I think it's probably that, at least. I don't know if it's a mental health thing, if it's a personality disorder thing. I don't know. It's probably a little bit different combinations of all these things. But there's something that, and it's a get rich quick thing. I'll be a millionaire or I'll hold to zero. That's not really a healthy way to look at it. It's not. And I wish that this thing was to the point where that was something that people could say and actually not get completely, at the very least disrespected, but, made to feel whatever. But there's something wrong, and maybe it's larger than this. Maybe it's a problem with the system itself. And I'm not talking about Wall Street. I'm not talking about the exchanges and off exchange. I'm talking about, in a larger sense, our system in general. I don't know. Suspect it has something to do with it. But is it a generational thing? I have no idea. But I would just like to, well, it was just, it's unfair, okay? And that's, we can go at it from this angle. It's not fair that these grifters can put whatever they want out, literally making the most ridiculous claims. What did Trey claim today? I don't even remember. Or no, it wasn't Trey. It was Al from Boston. It was Al from Boston who claimed that somehow he has the exclusive information that AMC's institutional holdings add up to more than it should. I mean, and people get on me and make fun of me for having, doing 2 or 3, 4 live streams a week. Meanwhile, Al from Boston has done at least 2 live streams today, maybe 3. And they're all just this, AMC banter. Drunken disorderly, wherever it was. All this bullshit every day. every day. Margin calls, very close. All right. Great job, Tyler, the creative investor. We'll believe that. Margin calls, very close. We are closer now than ever before. Okay. Like, all right, but no, you don't have any credibility. But then why does it have over almost 2,500 views? Makes no sense. Something's wrong. Jim Cramer. The MOAS is confirmed for AMC stock. Okay. Well, all right. Oh my God. Got the strike up. Strike for men. All right. This is the last video, and then I'm calling the stream. That's all she wrote. That is all she wrote after this. So, anyway, thank you for checking out my live stream. By being in a live stream like this, I think, and I'm not trying to be a narcissist or full of myself. That's, the least of what I'm trying to do. But I think that by diversifying what people listen to, they're going to be steps ahead of all of these other idiots. They're going to be steps ahead of anybody on these channels. And that's like a secondary, that's like but just a byproduct really of having a curious mind and questioning things, because they're not questioning it at all. They're just going with it. And they let these guys control the narrative. There needs to be pushback against these guys. The apes, but these guys. All right, Frankie, take us home.
Hey, this is Frankie. Let me say I'm not a financial advisor. Anything that I say in this video is for entertainment purposes only. Whatever I say in this video is my opinion. It may not necessarily be factual. You know me, I'm an AMC guy. But when I see the hedge funds engaging in what appears to be criminal activity in the stock market, even if it's not related, man, to AMC, but I know people in our communities involved in it, I got to say something about it. So for people in our community that had a problem with retail investors calling themselves apes and retail investors being short killers, tell me, after looking at what they do in the Rdbx, tell me if you still have an issue with retail investors being apes and being short killers. If you look at what they do in the Rdbx.
Here we go.
See, it's one thing to short a company. You can short a company, and some company needs to be shorted. But here's the thing, man. You cannot collude together and use illegal naked shorting to run a company out of business. That's illegal.
God.
What they do in the Rdbx, man, is outright criminal. And they do.
Yeah, but, how dare they collude together to sell 4 million shares short? Holy shit. I can't believe they would collude and sell so many shares short. 4 million. Fuck. How are they ever going to come back from this? Seriously. That's wild.
Doing it in plain view in front of everybody, and everybody can see it. You see what I'm saying? They have not learned their lesson when it comes to the position that they in, when it comes to AMC.
Wow. So this guy he literally is talking about himself. He is literally describing the situation that he is in, that the apes are in. It's really fascinating that he projects so fucking much. Wow. He needs to see a therapist or a counselor. There's some shit going on there. Holy fuck. But man, it's so classic. Shit, go to a Scientology auditor. Don't do that. Get a damn e-meter. But this is insane. Like, they've not learned their lesson. You haven't learned your lesson. Oh my God. Wow.
In GME because they greedy, man. They not gonna learn their lesson. They don't follow, man.
Yep.
No rules. You know, they don't follow nothing to nobody. Man, they do whatever they want to do. That's how they operate. Cause I mean, it's ridiculous, man, what they doing to Rdbx. And here's what they trying to do, man. They trying to run this company down to zero. And what they trying to do, which was the same thing they was trying to do with AMC and GME, they trying to run this company down to zero so that they can get rich and walk away, man, and don't pay no taxes. They don't care about this company going out of business. They don't care about people losing their jobs. Man, they don't care. You see, and see, Rdbx is perfect for them because they got people in their clique and in their circle. They want Rdbx out of business just for the same reason they wanted GME out of business and AMC out of business. Because see, people in their little clique that they act like hitmen for, see, they only want streaming.
Hitmen.
So Rdbx is a perfect.
They only want streaming. Wow, this guy. I mean, there's no reason that this gentleman should be talking about stocks. Period. There is zero reason. But we are in literally the shoe shine surfer dude phase of this bubble. People like this and people who listen to people like this are going to get destroyed. Period. I mean, I don't see how there's any other option. That's how it has to be. That's how it will be, but that's how it pretty much must be. Most people who really aren't trying or are really just spouting a narrative, they're going to get absolutely, let me just use a Lou term here, they're going to get vaporized. And it doesn't really bring me pleasure to say that, think about it. Like, it kind of sucks, actually. Why? How did this come about? Because the first people who started it were fucking greedy. And they kept going with it. And it just snowballed. And now we're at this point. We've got this dingleberry here. You know, literally talking about the ape community, but saying hedgies and one percenters and institutions, hedge funds, market makers, one percenters. But he's describing the self-centered, narcissistic apes. It's so fascinating. I would love to see or know what the hell is going on with this, here, because there's something going on. But this whole thing it's just fucked up. So fucked up. You count on YouTube about as much as you count on SEC. That's a dead end. So anyway, all right. Well, it's almost over. I gotta. God damn.
Target for them because they only want streaming anyway. So if you look at it, man, the thing is, this company has been shorted, man, over 200%. And the cost to borrow, man, is 900%. You see what I'm saying, man? They outright using illegal naked shorting and stock market manipulation to try to run this company out of business. And it's just ridiculous, man. See, that's why, and we'll see if anybody step in. I doubt it, but we're going to see, man, in the near future, is anybody going to step in to stop the hedge funds and these short sellers from engaging in illegal naked shorting and market manipulation?
Like, do you not even understand the rule of fucking law? Like, is somebody going to step in and stop this illegal activity that we're alleging that somebody is doing? That's not how it works at all. How about, how about they say, I mean, this is something that he's familiar with, I'm sure. How about we get a cop to pull you over because you're probably using drugs. You're probably, you're probably engaging in illegal drug activity because of who you are. Just like the hedge funds are engaging in illegal naked shorting because that's what they do. How stupid is that? How ignorant? And would you want to have the book thrown at you simply because you're a black man? I don't think so. I don't think so. I mean, like, I don't know, but nobody wants to be just by default get punished or accused of something. Whether you did it or not, that's the way the fucking rule of law works. So somebody going to step in and stop the illegal activity, bro, you have to show that there's fucking illegal activity first. You can't just say nobody's going to step in and stop them. Yeah, because you've done a shit job of showing what you're trying to get stopped. I don't even know what it is at this point. What are they trying to get eliminated from the market? I don't understand. What is it? What's the problem? Oh, right. Right. You're not rich. I mean, how silly.
And trying to short this company into zero and drive them into bankruptcy. We're going to see if anybody step in. That's why I say, man, look, in our play, AMC and GME, man, don't light up, man. Don't let up. Keep the pressure on them. Man, keep your feet on their neck until we squeeze. Thank you for taking time out to watch the video.
Can I keep my ass on their face? Can I keep my, I don't know. Yeah. Jesus, fuck. Teddy Zane wins the fucking award for the fucking dumbest fucking grifter today. Okay, can we just agree on that? He's terrible. Now Frank Muhammad's terrible too, but Teddy Zane is he's those two need to chill out. They need to fucking take a chill fucking pill. So I'll call on it. I'm calling on Teddy Zane and Frank Muhammad. I'm calling you guys out. Take a break from YouTube. Take a couple weeks off. Okay? People are getting real sick. And by people, I mean me. Are getting real sick of this nonsense every day. Every goddamn day. Really not necessary. You got a real bad temper. I got another woman that wants me to pimp her. But I don't think that I don't think anybody will step in. We'll see if anybody steps in. I don't think anybody will step in. God. Yeah, we would not want. Oh, it's terrible what they're doing to Rdbx. Oh my God, it's insane. I can't believe they would do that. They would do that, Oh my God. So yeah. Anyway, wow. Rdbx. Red bags. Red bag holders. I don't know. Maybe not, but you can't take anything that these motherfuckers say at face value. If you want to take it at face value, don't. It's just not worth it. It's not going to work out. At least not the way that, everybody's on the same fucking page about something. This is the thing. It's just so fucking basic to me. The more people that are on one side of thing, the more people that are on the same side of something, the worse it is. You know, everybody can't be bullish. And if everybody is, then that's a fucking sign that, you know, something's wrong here. Anyway, I've just been saying the same shit for 10 months now, 8 months, whatever. But anyway. So we'll have the live stream tomorrow around 6 for the futures market. Now, I think this will be an interesting day tomorrow. And it might give us a little bit of a clue as to what's in the cards for Monday. Hit the like button if you haven't, and subscribe. I'm curious to see what happens on Sunday around 8 o'clock. Or, sorry, 6 o'clock. Model 3 dude, my friend, thanks for being here. Lynn, thanks for being here. The chat was wide open, and I did not see any new people in there really at all. I wasn't looking at the whole thing, but I did not see any riffraff. I didn't see any unwanted faces or names. So, and Tony was here. That's cool. Pretty good. Yeah. So, yeah. Antoinette's there. She was. A Super Tramp was there for a minute. Maine was there. And, yeah, guys, appreciate it. We'll see you tomorrow around 5:30, 6, somewhere around there. Looking at these futures, seeing what happens. So, catch you then.